Gold prices are acting much the same this Monday and continue to hover around last week's 5.5-year low. What can we expect this shorter trading week? Jim Wyckoff, Kitco Metals Senior Technical Analyst, joins us now. Jim, good to have you back on the show.
Hi, Danielle. Always nice to be with you.
So, Jim, this Monday we just have more of the same. The U.S. dollar index trading higher after hitting a 7-month high overnight, which is not faring well for gold, Jim. It's a shorter trading week with the U.S. Thanksgiving, so can gold catch up here?
Daniela, indeed, the outside markets are just fully bearish for the precious metals, and we see gold hovering near a 5.5-year low, silver at a 6-year low. The path of least resistance in the near term, given the very bearish technical postures for both gold and silver, the path of least resistance for both is sideways to lower. Could see some short covering, some bargain hunting step in here, but near term, I don't see much hope for the gold bull. However, importantly, what we're seeing at present is an extremely bearish psychology in the precious metals marketplace. And that tells me, having watched markets on a full-time basis for the past 30 years, that sentiment could be ready to change. I think the vast majority of the downtrending price moves in gold and silver have already been made based upon this extreme bearish psychology in the market right now. Too many traders and investors are on one side of the boat.
Well, Jim, let's talk about a possible big news item that could help gold next week when IMF policymakers are expected to add the Chinese currency to the special drawing rights basket. And this would give it equal billing with the dollar, the euro, the pound sterling, and the yen. How could this affect gold prices?
Daniela, markets factor in news events well before they occur, especially known upcoming events. My research is that the marketplace fully expects the yuan to get its special drawing rights status. It's not going to be a surprise to the marketplace, and I think there's going to be minimal reactions for the price of gold.
Well, gold's not the only one hurting here, Jim. Silver hitting a 6-year low overnight. What are you seeing for the metal here?
Same thing as gold, Danielle. In fact, silver is probably going to follow gold. In fact, the entire raw commodity sector is in a very bad way right now, led by crude oil at a 3-month low. Like I said, the near term does not look good for the raw commodity sector. I don't see any early technical signals to suggest that the sector is going to bottom out soon. However, from a macro perspective, I do think that we are at a near a historic bottom here in this bust cycle for the raw commodity sector, and I think 2016 we'll see the raw commodity sector turn, and I think the precious metals are going to turn also. History shows that with this extreme bearish psychology in the marketplace, that market bottoms occur much sooner than most traders ever reckoned would be the case.
All right. Well, on that note, Jim, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, I'm giving both gold and silver a near-term Wyckoff's market rating of 1. That's fully bearish. It can't get much more negative than that. For March Comex gold, we've got overhead chart resistance at 1100, solid support at 1050. For March Comex silver, we've got solid technical support at 1350, solid resistance at last week's high of 1444.
Jim, thanks so much for your thoughts today.
Thank you, Daniela. Happy Thanksgiving.
Happy Thanksgiving to you as well. And thanks for watching this edition of the Kitco Gold Report. We'll see you tomorrow.